you for joining us. I'm Bobby Rebell, host of the Financial Grown Up Podcast and host of Money with Friends. I'm here with Grant Sabatier. Say hi to everyone.
Hi, I'm Grant Sabatier, creator of Millennial Money and author of Financial Freedom. So glad to be here.
We are coming to you, I believe, on YouTube, on Facebook, and on Twitter. So please say hi and let us know if you are joining us, which platform you're joining us from, because we always love to hear that. And also where you are, because we love to hear the different places that people come to us from. We have sometimes an international audience, which is actually really cool. You saw some friends, some family over the holidays, which was nice after Thanksgiving.
Yeah, unfortunately, I didn't take the CDC advice to stay home, but my parents were in quarantine and we felt safe. Straight shot drive on one tank of gas. And so got to spend some time with my parents, which as they're getting older is I think, very important.
I think it's really important as well. And I think even though you say you didn't take the CDC's advice, I think you did, because you did a straight shot drive down there and they had quarantined and you had quarantined. And I'm going to guess you had whatever testing, which I know a lot of people were doing before Thanksgiving. So that was respectful. That was respecting the CDC guidelines. So I think that's fine. And it was only a handful of you. You didn't have a huge family gathering with tons and tons of people. So I say mazel tov.
Yeah, absolutely. It was just four of us total.
Yeah, exactly. I don't think 4 is an excessive Thanksgiving. We had just the 5 of us for my immediate family here for Thanksgiving. And my stepdaughter, Ashley, cooked everything. She did an amazing job and we had a nice time as well. We are going to be recording 2 episodes here, everybody, of the Money with Friends podcast. They're going to go out on Tuesday and Wednesday of this week. So mañana. The first one is kind of a tough one. We had some sad news over the weekend that Tony Hsieh, the entrepreneur well known for his work at Zappos, passed away. It sounds like it was related to a house fire. So that's tragic. You can hear we're recording in my apartment, so you hear some construction noise perhaps. But he really set a standard for how people would do business on the internet and connect over things that were very, unhuman. The internet is not a very human thing, and he managed to make it feel human. Right, Grant?
Yeah, Tony Hsieh is the man. I read Delivering Happiness when it came out, I believe in around 2010, and just was absolutely in love with his philosophy. And I remember when Zappos came out with the free shipping, you could try on as many pairs as you want. And it was so revolutionary at the time that it made a huge impression on me because it was right around the time that I was starting my first company. And so that book, I soaked it up like a sponge, and he had a huge impact on my life. So, what a tragic loss so early. He was only 46.
Yeah, it is tragic. And we're going to talk more about all of the innovation and the things that he brought to the world and really changed the way that we relate to each other over technology. And the other story we're going to be talking about, a little more upbeat, is going to be an outlook for 2021 and how investments will go. I'll also reveal the results of our Money Friends poll that we did on Instagram. I hope everyone is following us there at Money Friends Pod. We asked people if they think 2021 will be a good year for stocks. So I will reveal the results for that. On that note, let's get started. Hold on. I'm going to just press our backup audio recording. And by the way, you guys, regulars know, feel free to add your questions and comments to the show, and we'll try to get you in to the show, give you a shout out. Here we go. This is Money with Friends for Tuesday, December 1st. The world lost a great technology innovator, investor, and entrepreneur in Tony Hsieh this past week. Best known for his success at Zappos, Tony Hsieh set the stage for so much of how we all shop and do business online. We're going to talk about his life and his legacy with Millennial Money's Grant Sabatier here with us. It is Tuesday, December 1. Let's talk money with our friends. Welcome to the Money with Friends podcast. I am certified financial planner Bobby Rebell, host of the Financial Grown Up Podcast, coming to you from my very grown-up kitchen in New York City.
And I am Grant Sabatier, the creator of Millennial Money and author of Financial Freedom, coming to you from my attic in Columbus, Ohio.
Here on Money with Friends, we talk about the latest personal finance headlines. We add in insights and wisdom from our fantastic cast of collaborators and thought leaders, including Grant Sabatier. We mix in questions and comments from our money friends, and we leave you with a takeaway to make it your own. But before we get to our story, I want to talk about a different story. We're going to narrow it down to those passionate podcast listeners who are dedicated to living their best life. That's you guys, right? Well, Walgreens created a new, easier way to shop, save, and stay well just for you. It is called My Walgreens. And when you join, you'll discover personalized deals, instantly earn unlimited rewards, and receive real-time local health alerts. Join for free at mywalgreens.com. Exclusions do apply. Grant, welcome back.
So glad to be back.
How was your Thanksgiving?
It was wonderful. It was nice just to get out of town for a couple of days. I feel getting a little stir crazy here at the end of the year because of lockdown, and was glad to get out and see some different scenery and have a nice drive and see my parents. So what about you?
We had a great time. We were at home, just my immediate family, but we enjoyed a traditional turkey dinner, although I had salmon because I don't eat poultry. But anyway, I have a lot to be thankful for, and I'm really trying to focus on that these days because it continues to just drag on this situation. Before I forget, Grant, congratulations. We can finally celebrate in public your success. You sold your website to Motley Fool.
Yeah, Millennial Money was acquired by the Motley Fool in October, and its biggest site acquisition to date. And so I was the seventh website that they purchased. And now I've signed a deal to stay on with the Motley Fool and help them grow the website. And then went from having a 7-person team to now over 450 people who are behind the website. So everyone is moving quickly to scale it. And I'm excited that I get to do what I like to do and don't have to do any of the things that come with launching and growing such a large website.
Well, congratulations. And I love seeing two of my favorite websites merge together and collaborate. Collaborations are always good. And we're so happy you're here to collaborate with us on Money with Friends. Let's see which one of our other friends is going to lead us into today's headlines. All right. The headline that we are going to read is actually from the New York Times. It is by Glenn Rifkin. And it starts with Tony Hsieh, longtime chief of Zappos, is dead at 46. In the early days of online retailing, he realized that the key to success was making people feel comfortable and secure shopping on the internet. Tony Hsieh, the technology entrepreneur and venture capitalist who built Zappos into a $1 billion internet shoes and clothing powerhouse, died on this past Friday at a Bridgeport hospital. It was apparently, and I'm just summarizing it here, he was hurt in a house fire. So it was a real tragic situation. And so, by the way, our heartfelt condolences to Tony's family and friends. Really, 46 years old. Gosh. Well, here's a little bit about Tony from this piece in the New York Times. He sold his first company, Link Exchange, an online advertising network, to Microsoft for $265 million. Then he became a venture capitalist, and he invested in a shoe startup, which was then called ShoeSite.com. He took over as CEO eventually, and then he built the company into an internet giant. By the way, the name was changed to Zappos.com, which is an adaptation of zapatos, the Spanish word for shoes. His main thrust was getting customers to feel comfortable and secure buying online. That was really credited as the key to success and the growth. And Grant, I want to bring you in here. This was at a time when people were pretty skeptical about the idea of buying shoes online.
Yeah, so Tony Hsieh was one of those guys. He was very successful early on in his career after selling a link network to Microsoft, and had a bunch of money really to do whatever he wanted with his life, and wanted to build the Amazon of shoes. And so partnered with ShoeSite.com, changed the name, and then not only invested his money, but really invested his time more than anything else, and saw the opportunity to completely change the way that people shopped online. And the only way to do that was to really put the customer first and build that trust with people who historically wouldn't be shopping online. You think about the shoe business, naturally, it's something where you can't normally imagine imagine buying shoes online, but what piqued his interest was that at that time, about 5 to 10% of all shoe sales were actually mail order sales. And so that piqued his interest that there were people out there who were comfortable already buying shoes, through the mail. And so why can't you just expand that? And the way to do it is to relentlessly focus on the customer, even at the expense of Zappos in some cases, because if they didn't have a shoe, customer service agents would actually recommend another website, one of their competitors, where they could find that shoe. And there's a really famous story where actually someone called in and ended up asking for travel recommendations from a Zappos customer service representative. The call lasted over 2.5 hours, and that person actually helped them plan their travel. And so there's some of these great stories that were early PR, for the company, and really helped them differentiate themselves and create, at a time when it's very competitive online, their own blue ocean strategy.
That does not surprise me, because when you read about Tony Hsieh, and I never met him and I did not read his book. I know you read his book. We'll talk about that in a minute. But this New York Times article does talk about the fact that employees in the call center were actually told to engage in customers as if they were speaking to an old friend, and they were supposed to just have welcoming banter and just, make it feel like you were shopping with your friends.
Yeah, I'm actually surprised that more companies haven't done this. And so instead of having their call centers outside the US, he decided to build a call center in Las Vegas and then move the entire company to Las Vegas and make it customer focused, customer centered. And that's still something you actually don't see a lot of in the US. Whenever you call any brand, really, you're going to be outsourced to India or the Philippines or somewhere else. And so I think he was an early innovator. And there's still a lot of, he did this over 10 years ago, and companies still haven't caught up to, he was that revolutionary.
Yeah, absolutely. What did we learn? What did you learn, I should say, because I did not read his book, but he did write a book, Delivering Happiness, in 2010, and it described his customer service philosophy. Tell us more about that.
Yeah, so I think it's the simple idea that whenever you're selling anything, you need to humanize your brand. It needs to be a human to human interaction. You need to personalize the internet. And so putting the customer first, this idea of delivering happiness, you want people to have an immense amount of excitement and joy when they get, their shoes or their packages, and even make it easy for them to return. And so he eliminated all those friction points. One of the biggest things that he did was just put the phone number front and center on everything. This is at a time, and you still see this now, where you have to search for the phone number of the company to cancel your subscription or to return anything, or actually talk to a real person. Zappos at this time had their number literally in the header of their website. It was on all their boxes. It was really front and center in everything that they do. And he wanted people to call and engage with the brand, because then that would create loyalty. And when you can build loyalty, when you can build a brand, that's what's going to differentiate you in an increasingly competitive space. And it's very simple. Make people happy and they'll come back and buy more.
So true. And look, he also worked hard to take away the friction from buying shoes online. So he encouraged people to buy it in more than one size, then it's okay to return it. So if you didn't know if you were a size 7 or 7.5, buy both. They're not going to give you trouble about returning them. I feel like other companies like Warby Parker comes to mind, where they just said, we're going to send you more than you need, knowing that you're going to return most of them so that you find one you like. And it takes away that barrier and that just the pain point of returning things. I mean, I have definitely bought shoes from Zappos at full price when I could have gotten them at a discount somewhere else, just knowing that they're going to arrive in 2 days, because that's another thing. They arrive reliably, I believe still, but in my experience, it's always been in 2 days, and there's no trouble sending them back. It's just easy. And a lot of times easy is more important than the cheapest price.
Yeah, I was actually amazed, although the article didn't talk about it, just over time seeing the huge impact that Tony Hsieh's philosophy actually had on Amazon. And so you might not know that Amazon acquired Zappos for, I believe, $1 billion. And I believe that Zappos was doing all that free shipping before Amazon Prime even existed. And so you see a lot of the masterwork of Tony Hsieh in Amazon today, and really a core part of their own identity. And so he had that ripple as well. And yeah, it's one of the things where he invested in a significant amount of money, because they were losing money at first when it came to allowing people to ship back whatever they wanted. But in anything in business, can you create a differentiator around your brand? Can you do something different and first that not only delights the customer, but also is a masterful PR move? Because everyone was writing about Tony Hsieh. And then he became kind of the reluctant management guru in a lot of ways, came out with this book that was kind of so different than everyone was thinking about online business that it really, he exploded onto the scene and became such a revolutionary force in business. He's one of those guys that was always willing to push the envelope and try new things. And I remember laughing when I learned that he lived in an Airstream trailer in a tiny home park in downtown Las Vegas. And I've actually been to the Container mall that he built down there, and it's super cool right in downtown. And he was just a cool guy, clearly loved life, didn't have any kids, and unfortunately actually just retired this summer from Zappos after being there about 20 years, and died in the house fire. He was visiting his brother. He was on his brother's vacation home. And just one of those accidents that no one could have foreseen.
Yeah, it's tragic. But he really did leave a mark. He's very, if you listen to interviews with Tony Hsieh, he's very soft spoken, very much an introvert. And he talks about the fact that he tried to hire different personalities and how important the company culture was. And in fact, one of the reasons he sold his first company, that Link Exchange, to Microsoft was because he felt he'd kind of lost control of the company corporate culture, and that as the company grew, it was very different. And so that really, I think, informed how he was very on top of how Zappos grew and how he retained that corporate culture. It was very important to him.
I think one of the things that's really interesting too is just the impact that he was able to have through his business. So we often think about companies or capitalism as destroying things and exploiting people. And he was such a shining example of the amazing byproducts of starting a business and creating a great company culture. I know his mother famously wanted him to go get a PhD or become a doctor, but he was really inspired by the idea that a business could transform lives and transform communities. And so a lot of the things he was talking about 10, 15 years ago are now more commonplace, within corporate culture. And it takes those revolutionary thinkers just to help people kind of question the way that things were. And I didn't realize he was so young. That was one of the things that struck me in the obit, just how he had done all of this, so early on, and clearly was a guy that delighted in life and delighted in helping people and used his platform really for good, in addition to making a lot of money. And that's one of those things that he was financially independent so early that he eliminated this idea of risk and could just go out and build the things that he believed in. And that freed him up to do so many amazing things.
Yeah. And he started, by the way, Zappos, the way he got involved there, as we mentioned, was as an investment and as, part of that philosophy. So I think that was really meaningful. Hold your thoughts for just a moment. We're going to get to our takeaways, but I do want to talk a little bit about the idea of investing and diversification and how that can eliminate, well, not eliminate, but it can reduce your risk when you think about different ways of investing. There's a lot of things people can look at besides the stock market. For example, a lot of billionaire investors, they control their risk by investing in different things, not just stocks, but one thing they often invest in is blue chip art. And it sounds unusual to a lot of us, but that's something the ultra wealthy have actually been doing for centuries. From 2000 to 2018, art actually outperformed the S&P 500 by an incredible 180%. Just a few years ago, believe it or not, a single work of art sold for $450 million. But that is something that really has not been available to individual investors like us until recently. So now here's the thing. With Masterworks, you and I can invest in the same paintings as millionaires and billionaires, but at a fraction of the cost. You can learn more about masterworks.io by going to their website. It's an exclusive platform that makes it basically as easy as trading stocks online to invest in art. And the best part is that you don't necessarily need to know that much about art. Their experts create a custom portfolio to meet your investments needs. With masterworks.io, you don't have to choose between big risks and big returns. So to sign up today, use the promo code MWF. That's important. Use the code MWF to skip the line of 25,000 people waiting to get their first dibs. Again, it's masterworks.io and the promo code is MWF. The offer is going to expire soon. So before you do so, though, make sure that you see the disclaimer information at masterworks.io/disclaimer. Very interesting ventures over at Masterworks. I find it fascinating. I'm a huge fan of investing in art, and I think it's important these days that we diversify our investments and look at different ideas and see what's right for you. Grant, time for takeaways. What is your takeaway?
A few things. The first one is that it often pays to think in counterintuitive ways about a particular business as not only a good business strategy, but also a good PR strategy. Number two, when you're launching any company or thinking about launching any company, think very hard from the beginning around the role that you want to play as a person in that company. So Tony Hsieh was unquestionably the face of Zappos. Jeff Bezos is unquestionably the face of Amazon. Increasingly, you're seeing the most successful companies have a charismatic individual at the front of them, Sarah Blakely, all these people. And so I see a lot of entrepreneurs launching companies today that try to hide in the background, when Tony Hsieh is the perfect example of a guy who was able to humanize his brand, and people not only believed in Zappos, they believed in him. And so think about, in starting your business, what role that you actually want to play. And increasingly, he was really one of the first CEOs that came out and was that personality, and the company embodied everything that he was about. And really, kind of number two, going back to this idea that is often forgotten in business, you can get away with it for a little while, but the customer, or the companies that are most successful, are the ones that put the customer first and think about the customer and how to delight them, as Tony Hsieh would say, or how to deliver happiness. And so never forget, whoever you're, whether it's a podcast listener or someone who's going to read your book or go to your website or buy your product, try to give as much value as you can for them and put yourself in their shoes. The easiest way to do that is to actually talk with them, create an open line of communication. I know Tony Hsieh, just like Jeff Bezos, had an easy way for customers to reach him so he could learn about their concerns and what he could improve in his company. So whenever you're launching any venture, think about how you want to be front and center and how you can ultimately please the customer, because at the end of the day, they're the ones who are going to, hopefully keep coming back. I see a lot of young entrepreneurs, especially, not focusing on the customer, and there's a lot you can learn from Tony Hsieh. If you have even a small interest in this topic, his book, Delivering Happiness, is well worth the time, well worth the read. It's very quick, and no matter what you do, I believe it'll have a positive impact in your life.
Something tells me that book is going to be flying off the shelves this week. Grant, that you really nailed it. I don't have that much to add to it other than ditto. But I think what you brought out is so important. He humanized these transactions that happen through machines. And by doing that, that led to his success and really set a standard for how we got over a lot of the reluctance to buy products online, because there was this huge reluctance to take a chance, especially with something like shoes. And the irony, by the way, is that Tony Hsieh reportedly only had a handful of shoes, if that, 3 or 4 pairs of shoes. I think he said he had a pair of sneakers and a pair of flip-flops, and that was kind of it. He wasn't into shoes. He was into customer relations and serving customers, and shoes just happened to be what the website sold. It's kind of remarkable to think that if he happened to stumble on a different investment, that would have been the successful one because of Tony Hsieh. So I love what you said. But again, finding that human connection through technology was so important in what otherwise would have just been transactional relationships. And, price cutting only goes so far. People will buy from Zappos because of the culture that he created and that promise to customers. So I think that's so special and one of so many wonderful ways that he will be remembered and that his legacy will live on. Thank you for all your thoughts on this show, Grant. Tell us where people can find you and learn out more about everything that you're working on these days.
Yeah, the best way is to just go to grantsabatier.com. Even if you can't spell my last name, just try to type it and Google will finish it for you. You can check out all the cool stuff I have going on there, find my podcast and find my book, and stay tuned for what I have going on in my life.
Okay, well, you'll update us on future shows because you're going to be back on Wednesday's show, and then you're going to be back for your final couple shows next month. You guys can learn more about Grant and all of our thought leaders / collaborators on our website, moneywithfriendspodcast.com. So check that out. Also, please follow us on Instagram at moneyfriendspod. That is also our handle on Twitter. And we are working so hard to grow our YouTube channel. So please subscribe to our YouTube channel. Just go to YouTube and search for Money with Friends. And we would love to have you join us there. You can watch us record these episodes on camera and be part of the show. It's a lot of fun. On that note, we will be back on Wednesday tomorrow. Grant will be back. We're going to be talking about the man who called Dow 20,000 is saying 3 factors will make 2021 a very good year for stocks. I'm going to do a little spoiler. It's Professor Jeremy Siegel. He's amazing. So if you're a fan of his, which I think we all are, come back tomorrow. Come back, even if you're not into him, you probably will be after you hear what he has to say. It's pretty good stuff. And we'll see you tomorrow on Money with Friends. Thanks, everyone. All right. Thank you, everyone. You guys have been following along, but a very quiet audience here on YouTube. So speak up. Let us know, by the way, where you are joining us from. We've had a pretty good group of people here, but you guys have been really quiet. So I'd love to hear what you have to say. We also did run a little bit of a poll on the Outlook. We asked, so for the next show, Grant, I'm going to ask you what we got. Will 2021 be a very good year for stocks? And the answers were bulls will rule or a pullback is coming. So we'll see what people said on the next show. But definitely, if you guys are there, chime in, say hello. We would love to hear from you. And ready for show number 2, Grant?
Let's do it.
All right. This is the show, Money with Friends, for Wednesday, December 2nd, my wedding anniversary.
Happy anniversary.
All right. Thank you. Early. 14 years. Oh, my goodness. Okay. The man who called Dow 20,000 says 3 factors are going to make 2021 a very good year for stock. We're going to get into it one more time. Sorry, I stumbled. Take 2. The man who called Dow 20,000 says 3 factors are going to make 2021, quote, a very good year for stocks. We will get into it with the creator of Millennial Money, our co-host today, Grant Sabatier. It is Wednesday, December 2nd. Let's talk money with our friends. Welcome to the Money with Friends podcast. I am certified financial planner, Bobbi Rebell, host of the Financial Grown Up podcast, coming to you from my very grown up kitchen in New York City.
And I am Grant Sabatier, author of Financial Freedom and creator of Millennial Money, coming to you from my attic in Columbus, Ohio.
Here on Money with Friends, we talk about the latest personal finance headlines. We added the insights and wisdom of our fantastic cast of thought leaders, including Grant Sabatier. We mix in some questions and comments from our money friends, and we leave you with a takeaway to make it your own. Let's talk quickly, though, about a different way to invest besides the stock market, and that is in the art world, because, we can control some things, but not stocks. So it's important to have diversification. Where do billionaires control their risk? Well, some of them invest in blue chip art. I encourage you guys to check out Masterworks. They have a way for us all to invest in paintings the same as millionaires and billionaires at a fraction of the cost. And the best thing is you don't need to know anything about art. Their experts will create a custom portfolio to meet your investment needs. You can sign up today at masterworks.io. Use the promo code MWF to skip the 25,000 person waitlist and get first dibs. Again, it is masterworks.io. Use the promo code MWF and make sure to check out the disclaimer at masterworks.io/disclaimer. Grant, welcome back. We had a great discussion yesterday about the wonderful Tony Hsieh. Now we're going to talk about investing in 2021.
Yep, so excited to be here. This is a topic that I am really passionate about, and I have a lot of thoughts about what's going to happen in the market next year. So excited that you wanted to chat about this.
Without further ado, then, let's see which one of our friends is going to bring us into today's story. All right. The story we're going to use as a jumping off point is actually from MarketWatch. The headline, and it's by Mark DeCambry. The headline, man who called Dow 20,000, says 3 factors will make 2021, quote, a very good year for stocks. Jeremy Siegel is the person they are referencing. He is a Wharton professor, and he is credited, by the way, for calling for the Dow to reach 20,000 back in 2015. And he has predicted that the market could be in for a solid gain in the coming year. And he cites 3 factors. Those 3 factors are the healthy money supply, vaccine news, and this is his words. I want to make that clear. Better than expected election results. We'll get into what he means by that. But he's basically saying, this is coming from a CNBC interview, that those are the three factors that are going to lift the stock market. He talks a lot about the amount of liquidity from the Federal Reserve. That's been a big catalyst. The M1 money supply is up 44% since the beginning of March. That means they're pumping money into the economy still. And that is something that can be a big boost to the economy. He also talks about interest rates around the globe at nearly 0%. So that really makes assets like stocks a very compelling option for investors in the coming months. Grant, what do you think?
Yeah, so I don't think that his prediction around the Dow, even at 20,000, was that revolutionary, because one of the things we know historically, over any 10, 15, 20-year period, the stock market always goes up. So just saying that the Dow is going to go up, I could say that the Dow is going to be 40,000 in 10 years, and I have a pretty good chance of being correct. But what's interesting about his prediction is around 2021 and what a year it's going to be, because I agree with him that I actually think it's going to be the greatest bull year in history next year, coming out of the pandemic, for all the reasons that he states. But really, it's this idea of sort of pent up demand. It's something that we haven't experienced in our lifetime. We've all been locked in our homes. Savings rates have been at all-time high. So the people that have been making money have been hoarding it. We want to take vacations. We want to travel. We want to buy the things that we normally buy. And so I think the economy across all levels is just going to be roaring. The Russell 2000, which tracks the small cap stocks in the United States, just this month, had last month really had the best numbers that it ever had since being established. And so this market recovery is across all sectors, and that's what's going to make it so powerful. You're just going to have businesses booming, small business, big business, just for all the reasons that he explains. And I'm excited. I mean, for the year, because I've been sitting on some cash, as well. So I'm excited about the investing. I'm not usually a predictor of the market, but this is one of those things where I think a couple times in your life, you might see an opportunity. And this is one of those where clearly investing early, often, and as much as you can, even in just a broad index fund, like a total stock market index fund, you're going to be able to participate in the growth.
Well, and it's interesting because as much as this pandemic has been terrible for the economy, the stock market has done so well, in part, as you mentioned, because people are not spending as much money and rates have been at zero. So there are not that many alternatives for return. People are not really investing in fixed income. People are certainly looking for other places to invest besides stocks, but a lot of them are turning to stocks and to index funds, and that is a lot of what's boosting the market.
Yeah, and one of the other things you get is just high quality, low cost investing options have become increasingly available over the past 5 to 10 years. And so obviously we've seen the growth of Robinhood. We've seen the impact that commission-free trading has had across the market. Younger investors getting in, the ability to buy fractional, smaller shares. All these things have contributed to just a much, much larger percentage of Americans investing in the stock market. And then to your point, where else do you have to put your money? And so if you're working, if you're auto invested in your 401k, with the growth of index funds, with the growth, I mean, you have just an immense amount of momentum really across all sectors that I think it's the next 10 years even are going to be extremely bullish. I think putting an asterisk on that really the only thing that could have a negative impact is another form of pandemic or just climate change. I do worry about the impact of the climate on the economy longer term, but for the next 10 years, I think it's off to the races.
I want to get your point of view on one other thing that you alluded to, and that is talking about pent-up demand, especially for travel. We had so many CDC warnings over Thanksgiving, and yet people just traveled. They were just done. They were ready to go. They wanted to see their relatives. Many of them, as you did, traveled in a very safe way and still had small gatherings as you did. So I think you were okay in your gathering for Thanksgiving. But the travel industry, as beat up as it has been, Do you think it will see a recovery and beyond when we kind of come out of this? Because there's maybe a new appreciation that people say, I want to take that trip of a lifetime now, not later, because we don't know what will happen later. I know I'm so grateful for some of the trips that I did take, and so sad for I had a few international trips planned that are not happening.
Yeah, I think life, like investing, is about calculated risk. And so the simple idea of my wife and I driving back to see my parents are getting older. And so it's one of those things I want to make sure that I can spend as much time with them. Of course, my wife and I being a little bit younger, I actually had COVID in February. And so it's one of the things that who knows how long the antibodies last, but I felt like I had some level of protection. But you can be smart, just like you can be smart traveling uh, anywhere. I do think the travel industry is going to take a little bit more time to recover. I don't think we're going to get to pre-pandemic recovery probably until 2022 or 2023, simply because there's going to have to be enough of the population that has the vaccine where people feel comfortable, getting on planes, going on cruise ships. You're always going to have those people who aren't going to care, and they're going to do whatever they want. But I think it's going to take a while for it to fully recover. But to your point, I think the pandemic has helped a lot of us question our lives and what we've been saving for and what we've been putting off. And I do think you're going to see more and more people taking that once in a lifetime trip. I think you see a lot more people who are actually going to be retiring early. I think you're going to see a lot more people who are going to be willing to take even more risks in their life and not put off those things, far, far into the future. With that being said, we can't forget that pre-pandemic, a lot of the top destinations in the world had been over-traveled. And so you saw Venice starting to cut off some of the travel and some of the access. You see Machu Picchu with increasing numbers of time tickets. And I believe there was talk about actually shutting Machu Picchu down completely to tourists, if I'm not mistaken. And so as travel was more affordable, more and more people around the world were going to these destinations, and it was eroding natural habitats and, creating overcrowding. And so that's one of the big questions around just the growing population in general. I think for the U.S. economy, it's positive. I don't think the housing market is ever going to go back to the way it used to be. I think that housing prices are going to have record years over the next 10 years just because there's so many more people and they need places to live. And so the same thing with the economy as more and more people flood into it. But with travel, I think what you're going to see is a lot of destinations only be available to people at a certain socioeconomic level. I think it's going to get more expensive to travel to places like Santorini because there will be caps. It'll be more expensive to go to places like Venice because there will be a cap. And that's just a supply demand issue where the cost will just invariably go up. But yes, to your point, I think people will be spending more money than ever before trying to get out and see those places that they might have been putting off.
Yeah, and we do record this live in front of a Facebook and YouTube audience. We have some comments from our audience. We have Annette talking about who knows when the borders will open. It could take a year or two for the vaccines to get to everyone. And I know, some international airlines are now having regulations where you have to have the vaccine to even get on the plane. So that will slow down that area of the economy as well.
Yeah, and then Claudia asks, am I buying travel stocks that are depressed now? That's one of the things I'm actually not doing. And so I'm not buying any individual travel stocks like Boeing or the airlines or the cruise lines. I do think they will recover, but I don't want to put all of my eggs into those baskets. And so I'm continuing to invest in the broad index through a total stock market index fund. And actually the stocks that I continue to buy are more on the tech growth side, where I still see massive upside potential, like the Facebooks and the Amazons of the world, as opposed to the individual travel stocks. I do think that, for example, the cruise industry will struggle for a time. And you have to know Elon Musk, a guy that I really admire, even though he's a little crazy. I think he's right in stating that there will be likely another pandemic in our lifetime, and it could be potentially a lot worse. And so I think you're going to see a renewed sensitivity around people wanting to be, for example, on a cruise ship locked tightly together. And I think also with the airline industry, I think there's going to be different classes of travel where it won't just be first class and business class. I think you're going to be able to pay a little bit more to be actually on a plane that has more distance and be a smaller aircraft carrier. I see that as a trend that's likely to grow in the future as people will pay for distance and pay for more space when they travel.
That is really interesting. Also, really interesting. We did put this question to our Instagram audience. Our Instagram handle is at Money Friends Pod. We asked them, will 2021 be a very good year for stocks? The options were the bulls will rule or a pullback is coming in. I'm just going to reveal it because I'm curious to see what you have to say about it. Grant, it was relatively even, but we did have a little bit leaning towards a pullback is coming at 57%. Why do you think our audience has that hesitation? Why are they so cautious?
I think the hesitation is likely because of how well the market has performed this year, and the fact that the Fed and the government has pumped so much money into the system. And so the simple idea is if there's a ton of money in the system and if the deficit does go up, is there going to be a time when the government pulls back? Is there not going to be a second stimulus, for example? And then people in the economy who have been hurt by the pandemic, they're not going to be able to spend as much money. But I think those are confusing two different things. I think that, yes, the economy itself will struggle. Small businesses will struggle to survive and many will close. But, the saying the rich get richer is fundamentally true in this case, where the stock market itself, vast majority of the money going into the stock market, even though more and more Americans are investing, are people who have a lot of money, and so those companies that are growing are going to continue to be profitable. And so I think this, even if the economy is depressed and the average Main Street investor is struggling, I think writ large the market's going to continue to grow, and we're going to see an increasing distance between what the economy is doing and what the stock market is doing. And that's what the pandemic has clearly showed us. So I'm bull all the way, 100%, because there's not many other places to put your money, and more Americans are out there. They're going to be spending more money. They're going to be traveling. The global economy is going to continue to grow. More people around the world spending more money. I'm 100% bullish for next year.
And I do want to just clarify what one of the reasons Professor Siegel thought that the market was going to be up in 2021. He talked about the election outcome. I was very confused about what he meant by that. So I did look up some other things that he was saying that week and some other sources, including on the Wharton website. And what he's basically alluding to is the fact that he doesn't think there'll be radical reforms from the Biden administration. According to him, its latitude is going to be limited to easing trade policy and reversing Trump era regulatory. This is what he said, not us. Trump era regulatory relaxations. Quote, the Republicans did very well in Congress in the recent elections, so the possibility of radical reforms going through are greatly reduced. So that is from Professor Siegel. So basically, he thinks that there won't be big changes in things like how much tax corporations pay and trade policy. There'll be a little bit of change there, but we're not going to see any huge changes, and that will be good for the market. So I just wanted to clarify that because it wasn't very clear from the article. And then one final point from the piece is that he did say, looking even longer term, Siegel is forecasting that the Dow may hit 40,000 in the next 4 or 5 years unless something else derails the market's bull run. And of course, Grant, as you said, there are so many things that could derail this bull run, including predictions of, God forbid, another pandemic.
Yeah, another pandemic, just the, kind of uncertainty around China and some of the interconnectedness of the global economy. That's one of the only things that makes me nervous. How so many, for example, of Apple's iPhone sales are dependent upon China. You see Tesla, the run-up of Tesla stock, and the inclusion in the S&P 500. What percentage of Teslas are, worldwide are being sold in China, and just how reliant even increasingly American companies are on China. I see that actually as one of the risk factors, less of a risk factor with a Biden presidency, just because I think with Biden. People know what to expect, and you're right, and not a lot will happen, especially if there's the split control, Republican control in the Senate, as well as kind of a runoff in the House. I don't think a lot of those sort of tax cuts are going to be able to be pulled back, and so the next 4 years, there's not going to be a whole lot of waves. In my opinion. And so even with someone like China, I think less conflict, the better. And, uh, regardless of how this election nets out, although I think we know how it's going to net out now, I see the election having very little impact, especially now that some of this uncertainty is behind us.
Absolutely. Hold that thought before we get to our takeaways. I want to just take a moment and talk to our listeners about how we can all live our best life, because that's something I think that has become a priority for all of us, to say the least, right? Walgreens has created a new, easier way to shop, save, and stay well just for you. It is called My Walgreens. When you join, you'll discover personalized deals, instantly earn unlimited rewards, and receive real-time local health alerts. Join for free at mywalgreens.com. That is mywalgreens.com. Exclusions do apply. Grant, what is your takeaway from this piece?
Invest as much money as you can. I think, a lot of people have been sitting on the sidelines with their cash during this period and just putting their money into savings accounts, which really are doing nothing. And in fact, most savings accounts are actually going to be losing money due to inflation. And so just don't keep all your money in cash. Have a 6-month emergency fund, maybe 8-month emergency fund, or even a year emergency fund if you're in a career that's really unpredictable or a job that's unpredictable. But get the rest of your money in the market, because this is, especially for younger investors, the compounding early on in your investing journey really does add up over time. One of the things about my own net worth, over 80% of it has been generated from investing gains since I started investing in 2010. So I've been able to participate in really a great market over the past 10 years. And I think, if history teaches us anything, it's that the future is unpredictable. And so all these people that are saying, oh, we've had a great run the last 10 years, there's no way this can continue. It's up to you what type of risk you're willing to take in your life, but get that money, that cash off the sidelines, get it into the market, diversify. Don't just put all your money, for example, into individual travel stocks or even in Amazon. Get it into an index fund, and then maybe take 5 or 10% of your net worth and buy some of those individual stocks that perhaps you believe in. So my takeaway is this is something that I feel like I've got a decent intuition, and I've never made any market predictions ever. So it's the first time for me. I think 2021 is going to be the best year in the history of the American stock market. And so you don't want to miss out on that.
Well, Grant, I definitely want you to be right.
Well, yeah, we both want to be right.
And I love that you're taking bold steps now, and making these big predictions. I feel like you've really kind of grown into your own now that you've had all of these accomplishments, your best-selling book, your awesome podcast, and now selling your company. By the way, congratulations on that, selling your company to Motley Fool. So I love your predictions. And I think Professor Siegel makes some very compelling points. And as you said, though, we don't know. I mean, of course, we learned this in 2020 that hindsight is 2020. So look, don't change your investment strategy, and that you should have that emergency fund. I love that you pointed that out, because when you say put all your money in the stock market, that's after you're taking care of the things that you need to take care of. That's your investing money should be in investments. It doesn't mean you can't diversify within the stock market or in other investments, but it should not be sitting in the proverbial, under the mattress kind of thing. Savings accounts are not earning money. Obviously, you can put your emergency fund in the right vehicle for that. But I love the optimistic view, and I hope we're here a year from now celebrating the success of the 2021 stock market.
Even if we're not, I mean, investing is a long-term game. And so even if the market is down next year, keeping that money on the sidelines is still a bad decision. So, because over the long term, even if we're wrong about next year, the next 10, 20 years, however long you have to keep investing, will likely be positive and probably up quite a bit.
So well said, Grant. Thank you so much for being with us. Where can people keep in touch with you?
Yeah, check out Grant Sabatier.com, at Millennial Money on Twitter, or at MillennialMoneyCom on Instagram. Hit me up there if you have any questions. And this has been a lot of fun. I love this topic so much. And I'm really, really excited for all the craziness of 2020. I think 2021, we're set up for an incredible year.
I am totally on board with that, Grant. Everyone, learn more about Grant and all of our collaborators on our website, moneywithfriendspodcast.com. Please follow us on Instagram and Twitter at moneyfriendspod. And of course, be part of the shows here on our YouTube channel. Just go to YouTube and look for Money with Friends. We would love to have you join us with your questions and comments for the show. Grant, until next time, thank you so much for being with us.
Glad to be here. See you next month.
Awesome. Hold on. Let me just download that. Thank you to our audience. You guys were great. A little bit quiet today, but thank you for your comments, Claudia and Annette. And thank you for just being part of it to everybody else who was quietly watching. We love you guys. You guys make the show so much fun. And Joe will be back, I believe, on Wednesday to record another couple shows. Bye, everyone.
Bye.